From some huge catalysts for Dogecoin and a huge bullish formation in its price to all the latest data and updates from the crypto world, some important things are happening right now. So let's talk about it. So first of all, we are now seeing that there is another price dump in the crypto market during the last 24 hours. We can see here that after the recent rally, crypto prices have now started to struggle and they are now trading in the red. While Bitcoin is now trading below 40K, Ethereum and other altcoins are also struggling right now. And while the crypto market is currently looking bearish, popular crypto strategist Altcoin Sherpa is expressing bullish sentiment on altcoins and Bitcoin. Altcoin Sherpa is saying that altcoins are favored to surge if Bitcoin rallies by over 30% to 55K. He believes that Bitcoin is currently exhibiting a bullish market structure. The top crypto analyst says that a drop below 37K or a failure to hit 55K could invalidate Bitcoin's bullish thesis. Altcoin Sherpa also says that Bitcoin is currently ranging, and this could cause a strong rally once Bitcoin breaks out of the range. He believes that the target area between 55K and 60K presents a strong support and resistance level for Bitcoin. Altcoin Sherpa also says that Ethereum is likely to surge by over 20% if Bitcoin hits a price of over 55K. And this means that other altcoins like Dogecoin, Shiba Inu, and Mana will follow suit. And now, let's come to Dogecoin and see what is happening with it. So with Dogecoin currently trading around 13 cents, nearly 60% of Doge holders are currently in the money. According to data from crypto analytics startup Into the Block, 58% of Dogecoin holders are currently in the money, even with the price of Doge so far below its all-time high. The firm identifies the average cost at which tokens were purchased for every wallet with a Doge balance to determine how holders are doing. Into the Block's data further shows that 36% of Doge holders are out of the money, while 6% are currently breaking even on their investments. Notably, 56% of its holders have been storing their crypto for over a year, while 40% have been holding between 1 and 12 months. The platform's data, it's worth noting, only represents addresses on-chain and as such does not indicate how investors who custody their funds on crypto exchanges are doing. When a large percentage of crypto investors are in the money, it implies an asset is overbought and may be due for a correction. And I think this is why we are now seeing this correction for Dogecoin. And now if we come to its current price movements, we can see here that Doge has witnessed another drop during the last 24 hours. It is currently trading around the 13 cents range, and it appears that Doge has entered a bearish phase. While it is now trading below its crucial moving averages, the good thing is that Doge has still managed to move above the very important 50-day simple moving average. This means that Doge still has some gas left, and we can still expect some bullish moves from it. Another good thing is that its RSI is also sitting in the neutral zone, which means that there is no severe selling pressure on it. Moving on, we are now seeing that crypto markets bottomed out on 20 July. The market was rising in part to a short squeeze on Bitcoin and bullish sentiment. This happened after comments made by the likes of Twitter co-founder Jack Dorsey, ARK Invest founder Cathie Wood, and Elon Musk during a panel discussion at the B-Word conference, which considered how institutions can adopt cryptos. Meanwhile, market observers and investors such as Mark Cuban noted that as well as investing in Dogecoin, holders tend to use it more than other cryptos to pay for goods and services. Cuban owns the Dallas Mavericks basketball team, which accepts Dogecoin and several other cryptos as payment for tickets and merchandise. Meanwhile, as of April 2022, a total of more than 2K merchants such as shops, internet services, hotels, and gaming platforms now accept Doge as payment. So what it means is that irrespective of this yearly fall in its price, Dogecoin's adoption as a payment method is rising. And this has been possible due to consistent support from people like Mark Cuban and Elon Musk. Talking about Musk, we know that on 14 January, Musk tweeted that Tesla merchandise could be bought with Doge. Earlier in 2021, he ran a Twitter poll asking if Tesla should accept Doge for payment for its electric vehicles. While the company introduced and then later halted Bitcoin payments after concerns were raised about the energy usage of Bitcoin mining, it is now highly likely that it is going to accept payments in Dogecoin. In the latest Dogecoin news, cinema chain AMC started accepting Doge and other cryptos as payment for digital gift cards as it prepares to accept crypto for online ticket sales. In fact, users can now even buy AMC tickets with Dogecoin on the AMC app. So what we are now seeing is that major firms have either accepted or are interested in accepting Dogecoin payments. And these are some very bullish catalysts for it that can't be ignored. And this is why analysts are now predicting huge price gains for Doge over the years. In fact, we are now seeing some very huge predictions for Doge from different firms. So we are now seeing that in the short-term Dogecoin analysis from CoinCodex, the sentiment was neutral. There were 23 indicators giving bullish signals and 8 bearish ones. Moreover, CoinCodex's Dogecoin price prediction was that it could drop 12% to 13 cents by 25 April. On the other hand, the Dogecoin price prediction from Wallet Investor was that the price could reach 27 cents in a year's time and treble to 78 cents in 5 years. And based on historical data, Digital Coin's Dogecoin prediction saw the price potentially averaging 19 cents in 2022, 28 cents in 2025, and rising to 66 cents by 2030. In the meantime, Price Prediction's Dogecoin crypto price prediction put the average Dogecoin price at 16 cents in 2022, rising to 49 cents in 2025, and $2.8 by 2030. And with that being said, let's come to Bitcoin for a minute. So Bitcoin fell dramatically during the last 24 hours, forming a lengthy upper wick and dropping below 40,000. While Bitcoin recently crossed the 42K barrier, it plummeted significantly the following day, forming a bearish candlestick with a long upper wick with its price hovering around 39K. Meanwhile, daily technical indications are overwhelmingly bearish. This is because the RSI is below 50 and the MACD is negative. Both of these are regarded as indicators of a bearish trend. However, there is still some hope left for Bitcoin even after this recent dip. We are now seeing that with the current dip, investors can hope for an increased accumulation process which will result in a quick recovery. Market participants can expect a U-turn rallying towards yearly open at 46K after smashing the 50-day and 100-day SMA acting as blockades. In a more bullish scenario, Bitcoin is expected to spike and retest the 200-day simple moving average at 47K, and if the bullish trend continues, then Bitcoin might even retest the 50K level. Meanwhile, one of the elements that might signify a shift in the price of Bitcoin in either way is the amount of money that is flowing out of and into crypto exchanges. And we are now seeing that Bitcoin has lately seen a significant outflow from these platforms. Notably, on April 14, Bitcoin experienced its largest exchange outflow in 5 weeks, with as much as 25K or $1 billion worth of Bitcoin leaving crypto exchanges in just 24 hours. Following this, Bitcoin spot exchange reserves have reached their lowest levels in over 4 years, according to data from CryptoQuant. And according to historical data, large quantities of Bitcoin moving off exchanges cause prices to climb if the trend is maintained for a few days. For 2 reasons, Bitcoin flowing out of exchanges is often seen as a positive development in the crypto space. The pattern indicates that Bitcoin owners are not now eager to sell their coins for a variety of reasons and are instead opting to hold. Furthermore, this implies that there is fewer Bitcoin available on the market for whales to dump, and liquidity is drying up due to the lack of Bitcoin in general. The cardinal rule of Bitcoin is to keep your own keys, and the pattern might also indicate that users are taking this advice more seriously in the current climate. Moreover, some other bullish signals for Bitcoin have emerged, favoring a continued price rally toward the widely tracked 200-day simple moving average. According to a technical analysis by Katie Stockton, founder and managing partner of Fairlead Strategies, Bitcoin is defending the Ichimoku cloud support. Moreover, the latest bullish defense is backed by positive signals from technical tools like stochastics and MACD histograms. Katie Stockton said that Bitcoin held important cloud-based support near 40K and has generated an oversold buy signal from the daily stochastics after a 3-day rally, supporting a short-term bullish bias. Meanwhile, crypto analyst and trader Jason Pizzino is optimistic that Bitcoin could hit a 7-figure price over time. Pizzino believes that it's not too far out of the question for Bitcoin to rally by around 25 times and reach a price of $1 million. The analyst and trader says that for Bitcoin to reach this price, it needs to overcome challenges such as severing its tie to equities. According to Pizzino, Bitcoin is highly correlated to the Nasdaq stock index. Pizzino says that besides decoupling from equities, Bitcoin needs to trade more like gold, whose price is now near all-time highs amid an inflation spike that central banks are now fighting. And now coming back to Dogecoin, we have just seen some massive bullish catalysts for it. And it is now expected that Doge is going to come out of this consolidation phase and move to the upside. In any case, what are your thoughts on this? Let me know in the comments section below.